Now, would you do better just buying and holding SPY or doing a 1 year out married put on SPY? This question came to us directly from a PowerOptions member. I wanted to know what are the long-term results of doing a radioactive married put on SPY as an alternative to just buy and hold. What is the radioactive married put position? It's our preferred structure to control risk to single digits, an application of 12 plus different income methods described in the full course, The Blueprint. We're going to buy a stock, buy a put option that's slightly in the money, 150 days or more out in time. This puts the insurance time on our side, follows the 3 core principles which apply to any options investing strategy. The risk that we have in the married put structure is just the time value. Now, when I received this email, my initial thoughts are if we just look at the married put roughly 1 year out in time, buy the stock, underlying security, buy a 1 year out put, slightly in the money, to protect SPY following the blueprint structure. We do not apply any of the 12 plus income methods discussed to adjust the position, generate income, lower initial at risk, or potentially bulletproof the trade. And compare it to just holding SPY over the same time period. Well, with the assumption of the time value we paid, we would lose less with the married put on overall down years, but also make less on the married put structure and SPY in an up year due to the cost of the put and the time value eroding. Now, I was just going to leave it at that via email response. But personally, that's not good enough. Not for the customer, not for my standards as an options educator and the director of education here at PowerOptions. We have amazing tools available in PowerOptions to give the correct answer. And here we go. In the married put search, we created a screen to simply look for our preferred married put structure on SPY going 1 year out in time. We used an expiration time frame of 350 to 375 days. We looked for the percent maximum risk of less than 6.9% in most situations. That had to change when volatility was higher. Following the rules, we just went less than 15% in the money to control the risk to single digits, and we screened just against SPY. And each time we ran the search, we'd get a basic result that would match the default criteria, having a risk between about 4 to 7%. Once we saved that search, we can now use the PowerOptions historical and backtesting tools to see the SPY married puts year by year and how they would have performed compared to just holding SPY using the calculate group results function once the results are pulled up, matching our criteria from any historical date out in time. Let's go back a few years. Let's increase the results so we have a few results with an average range of risk of about 5%, 7 to 8 results per each tested year, as you can see here, with a percent risk from 1.9 to about 9.9%. That's going to vary depending on the year. Let's start off with the first available trading date of 2018. We're going to run that historical search on January 2nd, 2018 to the following expiration in 2019, the 18th of January, 2019. Standard expiration for 2019. All of the risks below 10%. Here we see the top 8 results, as I mentioned, that would have matched that filter on January 2nd, 2018. Using that calculate group results function, we see that on January 19th, the average return of those 8 married puts was a loss of 4%. Just holding SPY or SPX over that same time period would have been a loss of about 0.9%. As I mentioned, this makes sense. The RPMs lost all the time value, all the at risk, with no adjustments in place. SPY, SPX was essentially unchanged during that 365-day or 367-day time period. We lost the time value. SPY was down about 1%. We were down about 4% on average due to the time value decay. As we stated in the email, we're going to make less when SPY moves up. We're going to lose less when SPY has a bad year. But if it's just a neutral to stable year, we're still going to lose because of the extra time value eroding. Let's move forward to the next year. Assuming we would open the new married put positions after the expiration of the first put. So now we're going to run the search for January 22nd, 2019, looking forward to standard expiration in 2020, which happens to be the 17th of January. We're still slightly in the money with some of our put options here, going out 360 days, and we see the risk is a little bit tighter in these top 6 results. We're about 5.5 to 6.9%. Still in the wheelhouse of what we look for with the slightly in the money put options controlling risk to single digits. And how did we perform after 360 days? Well, as we can see here, the average return on the married puts was 18.5%, anywhere from 18% to 19%. The average return on SPX or SPY was 20.9% gain just buying and holding. Well, this continues to reflect what I made in the initial statement. On good years, we're going to make less on the married put, but we still made 85% of the unrealized gains in the underlying position. SPY SPX was up 20.9%. We would have made 18.5% with the married puts. Still made most in this case with a large movement, but we did make less. Let's go on to the next year. Going into 2020, and we know what happened in the middle of 2020, but we're going to go just year to year. Same approach. We're going to open the new SPY puts following that January 2020 standard expiration. We see the top 7 trades here that match the results in the historical search from January 21st, 2020, going out to standard expiration of the 15th of January, 2021, again, 360 days out in time. Average risk is a little bit lower. We're between 4.8 to 5.9% with the preferred slightly in the money structures, keeping risks to single digits. Although we know we had a big drop down there, or we're heading towards a big drop down in 2020, the RPM return was 7.2% on average for the top results. Buying and holding SPY would have been a profit of 11.9%. So we still made 61% of the movement in the underlying security with the protection in place without doing any adjustment or income methods. We're still verifying the initial statement that we made, and we're going to move forward to the next year. We're going to run our search again, following the standard expiration for 2021. On January 19th, 2021, we see the top 6 results. Here, risk is a little bit higher. We're still going slightly in the money with our positions, but we're seeing risks from about 9% with the slightly out of the money options, up to about 7.3%, going about 2-3% in the money. That's quite all right. We're taking higher risk in this case, but how would they have performed to January 2022? January 21st, 2022, the SPY married puts radioactive profit machines had an average return of 6.2%. SPX and SPY was up 13.6% during the same time frame. We still saw about a 46% gain of the underlying movement. That's a little bit lower than we expect. Normally in a married put position, we expect to see 50 to 60% of the realized gain of the underlying security, potentially more, if it's a higher move as we saw before. But this might simply be due to the implied volatility. The VIX was pretty high when the trades were opened. It was at 23.24. One point during this year, I think it peaked at 36%, but at the end, it was slightly lower. So we bought into a slightly inflated premium in these cases. That was reflected by that average at risk we saw in those higher ranges of 7.3, 7.8, 8%, and more. But let's move on. Here we are, ending in 2022, the last full year. Running the historical backtesting search on January 24th, 2022, following standard expiration of January 2022, into 2023. Here are the top 8 positions open. Again, we're still at a slightly inflated risk. The VIX was at 29.90. It did go much higher than that, believe me, that year, but it also came back down to as low as about 1550, below 16. But 361 days out in time, here are the top 8 results that match that basic search criteria for SPY for the married put preferred structure. And at the end, the SPY married put radioactive profit machine return was at a loss of 8.6%. SPY buy and hold was down 11%. Still on statement. We lose less in down markets. We make less in slightly up to neutral markets due to the cost of insurance. We make less in large market movements, but still making a good 70, 75, 80% with that large 20% movement we saw a couple of years ago. And how about rounding it off with just one other current test? Why not? Let's take a look at the SPY married puts that would have matched our criteria starting from January 23rd, 2023 up to current date. Today, April 6th, 2023. Here again, we see our results, and we have a much more controlled risk in place, better average than we want, from 3.6% at the lowest, being only about 5% in the money, to 8.9% at the highest, being slightly out of the money by about 3.94% or so. So taking those results, how would we have done up until April 6th? The average return on the married put positions would be about 0.6%. SPY, SPX, now trading at about 409.18 from where it was at 400.63. We're up about 2.1%. Now we're only seeing about 30% of the underlying gain right now. In this case, VIX didn't move too much. It was at 1981 when we opened the position. As we know, in 2023, it's fluctuated a little bit, but currently on April 6th, it's about 1850 or so. So not much movement in the VIX, but a slight decline that would have taken away some of that extrinsic or time value that we paid into the put option. Now, let's table those results for a better view. Over the last 5.25 years or so, 5.3 if you want to consider it that way, as we're just in the beginning of April, the radioactive profit machine preferred married put on SPY returns compared to just B&H, the buy and hold of SPY. From 2018 to 2019, the SPY married puts lost 4%. Buy and hold would have been down 0.9%. The difference here, the final row, is showing us a difference of minus 3.1%. We're comparing this to the radioactive profit machine married put approach, so we would have lost 3.1% more than just buy and hold. 2019 to 2020, positive 18.5% movement on average on the top married puts for SPY, buy and hold, a gain of 20.9%. The difference again, the married put on SPY on average is down 2.4% from just buy and hold. 2020 to 2021, gain of 7.2% on average for the married put SPY radioactive profit machines compared to a buy and hold gain of 11.9%, a difference of minus 4.7%. The SPY married put radioactive profit machine is lagging. 2021 to 2022, up 6.2% on average for the SPY married put positions, up 13.6% for the buy and hold of SPY over the same time frame. Again, RPM married puts are lagging by 7.4%, a little bit more than I expected. 2022 to 2023, average married put loss for SPY was 8.6%. Buy and hold on SPY would have dropped 11%. Again, now we have a gain of 2.4% in favor of the married put compared to buying and holding. Finally, 2023 to current, April 6, 2023, gain on average of 0.6% on those married puts that match that default search, compared to a gain of 2.1% on a buy and hold of just SPY now that we've started to see a few days up. Again, married puts lagging by 1.5%. Just the total returns, if we add the returns together, the SPY married put radioactive profit machine would have had a gain of 19.9% over those 5.25 years, whereas the buy and hold of just SPY would have been up 36.6%. Difference there, the married puts lagging on SPY by 16.7%. Not quite 50%, but close. But again, as we expected, just holding a married put position 1 year out in time on SPY, an ETF, or any security compared to buy and hold, if it's up over that time, we still expect to make 50 to 60% of the underlying, assuming no income methods and no adjustments, following the rules in the blueprint. We're still on statement and we're still on point. Now, just as an average return over the last 5.25 years, radioactive trade married put positions would have been up 3.79% on average, whereas over the last 5.25 years, just buying and holding SPY would be up 6.97%. So again, a difference. Married put radioactive profit machines on a single security with no income methods and adjustments is lagging by about 3.18%. We're still in that 50 to 60% realized profit of the underlying movement in the security. Monetarily, of course, let's just say we just invested $100,000 only each year. So every time we reset that search, we just put $100,000 into the positions. Well, the radioactive profit machine married puts on SPY would be at $119,900 over 5.25 years, and just buying and holding SPY would be at about $136,600. No compounding, no adding to the thing year after year, just straight buy and hold, investing $100,000. This is what we'd expect based on the numbers shown in the backtesting tools. So, just buy and hold SPY. Don't use the radioactive married puts at all. There's no point. Well, just hold on one moment. Remember, following the rules in the blueprint, we prefer to use slightly more volatile positions with more upside potential, following the criteria set and what's shown on the patented married put search tool for the default radioactive screens. We typically average 12 to 20% per year following the married put approach while using the income methods and the different adjustments while controlling risk, guaranteed. We incorporated none of the 12 plus income methods in the blueprint in this comparison, just straight buy and hold of SPY versus opening a higher cost married put to control risk, but not using any adjustments on the positions. So it is a fair comparison, but there's much more to the blueprint story and radioactive trading. And then you could follow up and say, well, I've seen your income method videos on YouTube. You could use income method number 1, selling a call against the married put position. I could do that buying and holding SPY as well. That wasn't really the question. It was just a comparison against buy and hold. But absolutely, you own shares of SPY, 100 block, 200 block, 500 block, 400 block. You can absolutely sell calls against that. Those riskless spread trades, income method number 6 and income method number 5, you could also do with owning shares of SPY in 100 share blocks or multiples of 100 share blocks. Can't do anything different there. And we're both going to receive the dividends for SPY, which was not included in the returns in this comparison. But what does my initial married put have that the buy and hold does not? That second working asset, the protective put, which I can manipulate as the market moves up and down to lower the initial at risk, lower the cost basis, not even selling calls, not even doing the other income methods, just adjusting the put up and down. And we're going to share that in part 2, which is going to drop next week. We're only going to adjust the put option of the SPY married puts when the market sentiment on power options gives a bullish buy or a bearish sell warning. So we're not going to cheat. Because we have the benefit of hindsight, we say, oh, here is a movement where I should have done this with the put. Here is this where I could have done this with the put. We're just going to go back historically using the historical option chain and the backtesting tools to simply show how I could have adjusted the put using what's called income method number 4 and income method number 9 only when those signals are triggered. And I bet you that in those down markets where we had a loss on the SPY married puts and a slight loss on SPY buy and hold, we're going to have a positive bulletproof position and a gain. I don't think we're going to be able to outperform that 20.9% movement in SPY with just income method number 4 and income method number 9. But I think with the slighter movements, that 13% gain, which was a 6.2% gain on the married puts, I think we're going to be able to equal buying and holding SPY or exceed it. I'm not even going to use the other put manipulations discussed in the blueprint, income method number 12 or income method number 3. Using 12 is not fair because that would potentially obliterate all of the returns of buying and holding SPY. We're just going to showcase what we started with, our second working asset, manipulating that position, and we're going to see just how we might be able to outperform buy and hold of SPY with the married put structure. Historical results are no guarantee of future returns for married put positions, any strategy, or simply buying and holding SPY. The married put controls your risk guaranteed in adverse markets better than a stop order. But as mentioned, one would expect to make less than the underlying move due to the cost of the insurance. We get what we pay for, and we have to pay for that insurance. The last few years have shown us that buy and hold in any security may not be the best approach, and many close triggers might occur due to steep declines and wild market movements. The proper structure of the married put and full use and full discussion on the income methods is only found in the blueprint. You won't be able to piece that all together through the various videos that you see here on YouTube on Power Options of Radioactive Trading. Although the Radioactive Married Put structure is a low-risk strategy, all options trading does involve risk and may not be suitable for all investors. I look forward to your thoughts on this video, and I look forward to your thoughts when we drop part 2, adjusting the positions in down markets to see if we can outperform the buy and hold approach.